Yo, what's going on, guys? Welcome to episode 4 of the time frame alignment model. Today I'm going to fix a problem a lot of you guys are struggling with, which is getting stopped out early. Then the real move happens and then you're going to be salty. You know, I've had it happen before to me as well. But we're going to fix that in this episode, so stick around for the entire episode. First of all, understanding market cycles is the topic. Look at this little circle I have over here, and I want you at the end of the episode to think back about this circle and see if you can notice something about this circle. Put it in the comments if you noticed it at the end of the video. But let's get into it. Market cycles. There are 4 stages in price delivery and they go as followed. It's consolidation, expansion, retracement, and reversal. There are no other cycles than this, and we're going to break down each one of them and we'll show you the intricacies and how to use them as well. What delivery is possible and which delivery is not possible. As you can see, price expand, it can have either a retracement, a reversal, or a consolidation phase. So it can have 3 phases after an expansion. The following is where most traders will get trapped. It's the consolidation phase, because once price consolidates, it can only do 2 things. It can either do an expansion phase or it can do a retracement. So now if you pay attention, you already can cross one of those 4 out of the equation, which is a reversal. And having this information is golden information. So now we can actually anticipate an AMD pattern. Now, what is an AMD? An AMD is a accumulation, manipulation, and distribution phase in an AMD schematic. I'm going to be breaking down what that looks like on this schematic over here. We've got a crude depiction of price action. We've got a range high. We've got a key level. And for price action's sake, I outline this specifically because we're going to use an AMD and market cycles with ranges, order pairing, and key levels. That's important for the trading model. Look at this over here. We've got an accumulation phase. Think about the AMD, right? It always starts off with an accumulation phase. Afterwards, you will have a manipulation phase. That's when price expands in the direction where it's going to reverse from. And then we'll have a distribution phase. That's important to know that this is an AMD because this incorporates the market cycles we will be using to look to trade from. Let's look at this from the market cycle perspective. First of all, we start off with a consolidation. We know there are only 2 things that can happen from a consolidation. It can only retrace or it can expand. Now, knowing it can retrace or expand, that's the only thing, so it cannot reverse. So if you actually see price action go higher here, you can expect that this is not the reversal. If it trades lower, that's the manipulation phase. It's also an expansion. Now we hit a key level, and as per the AMD schematic, you want to see distribution happen from the key level because you want to manipulate into a key level and then you reverse from the key level itself. The reversal is also an expansion in itself, and after a reversal, 3 things can happen. We can have a consolidation, we can have another reversal, or we can have a retracement. After this reversal happened over here, we can see price starts to consolidate. Again, think about what can happen with a consolidation. There are only 2 things that can happen. It can either retrace or it can expand. We have 2 continuation patterns. Either one of these 2 will happen, and only one I use in my trading model, and that is this one. It's a retracement which happens after the consolidation when that price leg up occurs. Why is this important? Think back about the previous episode about order pairing. You need a lower time frame range, a smaller range within the bigger range to order pair, and that's why this retracement is key for my model. So after that retracement, it can only expand higher as per market cycles, and then it completes that range high after hitting the key level. Now, continuation pattern number 2. This one we will not be using because this is not tradable as per my model, and it looks like this. It's a straight up consolidation into an expansion phase. So there's no manipulation lower, no retracement down to discount, no key levels or order pairing is happening. So this is all not part of my model, and we're just gonna leave this schematic behind and we focus on that AMD within accumulation, manipulation, distribution phase. Now, what does that actually look like on the charts? First of all, if you want to know where price is going, you need to determine what kind of market profile you're in. This is a gold chart, daily chart. I'm going to use recent charts, so you might know that we are in very bullish price action on gold at the moment. But we can see a market profile bullish, and then a key level is resting over here. And you always want to work with a key level when you use market cycles, because if you don't hit a key level, doesn't really matter where these cycles happen. It needs to have context and narrative. That's very important. So I've got a sort of a blank chart over here. We have the key level below us. And I want you to think about all the previous episodes and incorporate them on this blank chart. And I will give you like a few seconds and I will put my lipstick on the chart so you can see what I'm seeing over here. So first of all, order pairing high and low. Important, so we can know what low is actually high probability to get paired up with a high. We've got a key level, daily fair value gap, range low to range high. So that is our context and narrative. We want to pair up the sell stops with the buy stops that are resting above the range high. What kind of cycles are we seeing over here? We've got an expansion phase down into the range low, into the key level. Then we've got a reversal because you cannot see price consolidate or accumulate or go sideways. So this is a reversal or an expansion higher. Why is this not a retracement? I'll give you a few seconds to think. This is not a retracement because we are in bullish order flow. We took out a range low and we hit a key level. So all the probabilities are lining up for a reversal, not a retracement. And you always want to go with bullish order flow when the market profile is bullish. Now the next cycle over here, consolidation. So what can happen after consolidation? Think about it, right? Two things can happen, either a retracement or a expansion from that consolidation. If there's no retracement and there's no order pairing on the low of the consolidation, it's not part of my model. So we're gonna just let it be, right? And then over here, we've got the consolidation and then it expands higher to range high and then it completes this order pairing low to high. Let's go to another example. We've got a NZD USD 4-hour chart. Again, blank chart. I want you to think about all the previous episodes, think about order pairing, think about the market cycles we just discussed, and I want you to look at this chart and just think for yourself, where are the order pairing happening? Where is the market cycles? I will put it on the screen right now. We've got a range low being purged here, and attached to the range low is the range high, and this is where we want to pair up the sell stops to the buy stops. Can you spot a couple of cycles? And I want you to start on sell side of the curve first, and then we're going to go to buy side of the curve. Over here we've got consolidation, right? This is market cycle consolidation, so either two things can happen from here. It will expand or retrace. Now there's no retracement back into premium of this last leg down, so it will just expand, hit a key level down below here. I don't have it marked out, but there's a key level down here below this range low. So now we have an expansion phase. And now think about the AMD again. We have an accumulation phase, manipulation lower below an old low, taking out the lows, hitting a key level, and then we have a reversal. So we have that expansion or reversal phase over here. How do we actually find an entry here with market cycles? First of all, you need to mark out your premium and discount of the range and think about a smaller range within a bigger range. This is actually what you want to do. So you're trying to trade either a AMD or you're trying to trade the retracement back to discount and then order pairing lows to highs. So what do we got over here? We've got that retracement. So I want to see you look at this high over here to this low. This is the retracement after it expands higher. And sometimes it's difficult to spot in the charts what kind of cycle we have, because you might think this could be consolidation, but it's actually still this is the entire leg up and this is the entire leg down. It almost looks like it's consolidating, but this is not a consolidation. This is a retracement. So you want to catch the retracement only if it hits discount and it order pairs a low to a high. So where would you order pair the low to the high? You see this high over here and then the low down here, and then you can buy below this low and then order pair it on this high, and eventually you will hold it all the way up to the range high here because we are pairing up this low to this high, and then we're gonna complete it. So I want to take your eyes up into this area over here. This is the most recent price action from 3rd or 2nd of February. Look at all this movement over here. Can you spot some market cycles and what is the AMD in this occasion? So now we're zoomed in. You can actually see the order pairing technique again. We have the range low, we have the range high, and then we want to pair up, after we take out the range high, the buy stops with the sell stops that are resting below here. Now, because this is a smaller range within a bigger range, we can also aim for the larger range down here, because this is attached to the range high that it just got purged as well. So you can hold for this low and you will have a bigger risk to reward. But just this piece of price action and aiming for this low should be a solid trade setup on its own already. First of all, we've got a consolidation phase over here. So now we know only two things can happen after consolidation. It's a retracement, or it's just going to straight up expand. As per market cycles, we want to see a manipulation rather than an expansion if we want to take our model, because we want to see order pairing on the highs in the smaller range and pair them up with the lows. And if I put all the markings on here, we have this AMD schematic, right? We have a consolidation, then it manipulates as a retracement in the cycles back to premium of the range, and then it has a distribution phase, which is the expansion lower, and then it takes out all the range lows down here. So guys, I hope you liked this episode about market cycles and think back about the circle at the start of the episode. Comment down below what you think and what you notice about this circle. If you liked this video, make sure to hit the like and subscribe button, and I will see you in the next episode.